Hey guys, we got Jeff Daniels here with us today, and he wants to talk about how our market's looking like for the next year.
Yeah, well, first off, go Vols, 90 champs.
Yeah, and baseball.
Just got it. Anyway, so the housing market it's up and down, just like rates are, right? So,
Correct.
And, over the last 10, 15 years, our economy's went through a lot of different stuff. I mean, you got the 2005 Katrina, 2010 Nashville flood,
Yep.
Gatlinburg fires, flood
2016.
2016, 2024,
The hurricane.
the two hurricanes up through North Carolina. So, that's bringing a lot of different natural disasters to the market, which is causing a lot of issues. But then you talk, okay, well, rates, right? Feds decide they want to drop the rates. When they do, they drop it 50 basis points. And what happened? Rates went up.
Well, yeah, they have not come down.
Right? So, a lot of people's like, well, why is that? Well, you still got higher inflation.
Correct. The job numbers aren't where
Job
they were.
numbers ain't, but income is increasing.
Correct.
Right? So, the feds take all this data and they come in and are like, well, until inflation gets down to 2, they're going to continue to,
Keep those interest rates high.
keep the rates high.
And I really don't look for them to come down until probably fall of this season, of this year.
I don't.
And even then, it's not going to be by much from the way it looks of everything.
Well, they projected 75 basis points last year, and now they're down to possibly a quarter. But on top of that, what happened last week? California fires.
Fire, yep. And now
Right.
the insurance policy is going to pay out all that wonderful stuff.
Well, a lot of insurance companies canceled
That's correct.
policies. Now I heard today on the way up here that if they get rid of Newsom and the mayor, that insurance companies will then allow the policies to be reinstated. So what does that take? It's political.
That's correct.
Right? So we're dealing with a madness of political issues in our country. High inflation, high food cost, income is increasing slightly.
Slightly, not dramatically.
They're not predicting that rates is going to drop much in 2025. It may be fall of 2026 before we actually see something.
And that's understandable. I mean, rates didn't come down in Trump's first term until 2020. And what was the cause of that?
COVID.
Exactly.
Right?
Because 2018, 2019, we were hovering around the 4.5% to 5%, which everybody right now would think that's wonderful if we could get to 4.5%, 5%.
Yeah.
But they didn't bottom out until COVID happened.
Yeah, but a healthy market, a healthy real estate mortgage market is that 5 3/4 to 6 1/4 rate.
Correct.
Right? You know how long I've been doing
Yes.
this since 1992. So I've seen rates in the 9s. I've seen rates in the 8s and the 7s. I've not seen it any higher than 9, right? But this is still a good market to buy. Especially if Trump does what the new administration, if they come in and do all the tax cuts they're talking about and drill, baby, drill, we start getting energy prices down, then you look at a consumer's like, okay, well, here's my income, here's my outgo. I don't have any extra money at this current time
Correct.
to buy a house. But if we get all this, what's promised and what's been told based on how the new administration ran for the presidency, that $200 or $300 a month could be available
For them to spend on a new house.
Right, because we all know that buying a new house, that is your long-term investment.
Correct.
To where that's your money to retire.
Well, that's how you make your
money.
most money, is by purchasing property.
Right.
The thing that got me the most is that we are 52%, we have 52% less people applying for a loan application right now than we did in 2020.
I know.
So half the market has been cut off from being able to purchase a house. So right now you have the least amount of people that you've had in a long time out there looking for a house. So all these people that have been sitting on the sideline, now's the time to go out there and buy it, because now's the time to go get the deal.
Great negotiating can go on right now with
Correct.
sellers, right? Values have come up, applications are down, less buyers on the same property. Negotiate.
That's
negotiate
correct.
your closing costs. Negotiate this. I mean, you can negotiate with the seller
To buy your rate
to
down.
buy your rate down.
You can use some of that closing costs from one of the programs to possibly help buy the rate down.
Correct.
And again, I said 52% since 2020. It's 59% since 2021. Like, we're in the right time that if all these people that have been going, I'm waiting for the market to correct itself. This is the market correction.
Yeah. Well, they're waiting for the rates to get back down to 4. They got family members.
But when
they got friends that are in that 3.5. But if you're in a 3.5,
I did.
Yeah, I did too. But if you're in that 3.5%, 4% range, we're not going to see those rates for a long time.
We're not.
May not ever see it in my lifetime. 30 years of doing this, I don't know that I'm going to do it another 30. But
Right.
when the rates do come down, hey, you can refinance.
That's right.
If you do an FHA loan, buy a house and do an FHA loan, make 6 months of payment,
You can refinance after 6 months.
and you can do a streamlined refinance, which is basically you don't have to go through all the credit qualifying anymore, right? As long as FHA says, as long as your payment reduces $50 a month,
That's right.
you do not have to fully qualify. It's based on your payment history. Okay, so now you have credit qualifying and you have non-credit qualifying on the streamline. Same for, you also have the VA. You know, VA has the IRRRL, interest rate reduction loan, right? So that's a great program for veterans. You know, your government programs have a little bit more
Flexibility.
and more program highlights than you will with your standard conventional
Correct.
Fannie and Freddie.
Because on a conventional, you need to have it for at least a year, right? Before you.
No, 6 months.
6 months?
Yeah. And then there again, if you're, and I've always said it, if you go outside of the box lending, which simply means conventional, FHA, VA, USDA, if you don't qualify on those guidelines, you have other opportunities to where you can do a 1-year self-employed borrow.
Okay.
You can do a 12-month bank statement, 24-month bank statement. All kinds of different programs out there, other investors that can get you into the home. So I say that to, hey, let's open up in 2025. Let's make a decision to make that purchase that's going to basically set your life up as long as you're in that house, because you're getting equity. You're possibly going to get a house that has equity in it anyways.
Correct.
Which is hadn't been that way for a long
No,
time.
it has not been. You know, when we look down here and we see 2020, we're down 52%, 2021, we're down 59%. Some of these people were paying above appraisal prices just to get in the house, which means that money's coming out of your pocket. Not the bank ain't loaning more money than what the appraisal is. And right now, we're seeing some houses that come in the appraisal's coming in $5,000 or $10,000 over asking price, because we as realtors have negotiated the price that y'all are needing it to be as buyers, or maybe we give them their asking price, but now we're getting $15,000 back in closing costs and things like that, or for them to buy your rate down, so you're not paying it at a 6.5, maybe you're paying at a 6 or a 5 3/4 instead of a 6.5. But again, right now this is the best time that I've seen negotiating in the last 6-7 years.
Because the seller now, the seller now has the opportunity to not only help the buyer, but also to sell their house. Because the sellers are sitting on their house longer and longer and longer.
Yes.
Than they have over the last 5 years.
Correct.
Right? Why is that? Less applications, not enough consumers. So instead of dropping the price, they know that they're going to get the price, right? Well, let's do a conventional loan with 4% seller concessions. FHA 6%. This is based on the sales price. VA is 4%. USDA 6% is 100% loan.
Yes.
One loan, USDA rural development with seller concessions. Now, there are programs out there that we can look at, adjustable rate mortgages, which is eventually over the next 12 months is going to become a thing, because you can get a lower rate on an adjustable. There's also 2-1 buy downs, where you can buy your rate 2 or 3 points lower, and then it increases back
To market.
over to the market price over there. So there's a lot of different options out there. We just got to find the right one for the consumer based on their goals, based on their
what
where they
works
want their
best for
payments.
them.
Yes, yeah, because that's the job of a loan officer. In my position, is to educate the consumer, let them know what products are available, and what products that they qualify on based on the application they turn in.
Correct. And then we're just here to help you find the right house.
That's right. That's right. Teamwork makes dream work.
That's right.
So, appreciate your time. And again, my name is Jeff Daniels. I'm with Rate Mortgage, 615-779-8926. Love to hear from you. Answer any questions you may have.
Guys, y'all know how to get in touch with me. I'm Keith Boykin. We will talk to y'all later.
Have a great day.